In this session, let us talk about exchange earners foreign currency account, in short EEFC account. An Indian resident can open this account with a bank, basically the authorized dealer, and this account is generally utilized for crediting the foreign exchange earnings, and that too to the extent of 100% itself. Okay, so this account is going to be a non-interest bearing account, and no credit facilities, whether it is fund based or non-fund based, will be permitted against the security that are held in this account. And this account can be opened as a joint account with resident close relatives, which can be either on former or survivor basis, but that close relative is not eligible to operate this account till the lifetime of resident account holder. And all categories of foreign exchange earners, they can credit their foreign exchange earnings in their EEFC account, and they are eligible to retain 100% of the balances in EEFC account, but of course it is subject to the condition that net credits, that is after adjusting the utilization during a calendar month, should be converted into rupees, and this should happen on or before the last day of the succeeding calendar month. And this facility is mainly focused or intended to enable the exchange earners to save their conversion cost, transaction cost when they undertake forex transactions in future. So this facility is not to enable exchange earners to maintain assets in foreign currency. Okay, next, what are the eligible credits in EEFC account? Eligible credits include inward remittances through normal banking channel, but other than what is received pursuant to any undertaking given to RBI, or which represents foreign currency loan raised or investment received from outside India, or those received for meeting specific obligations by account holder, and the payments that are received in foreign exchange by unit in DTA for supplying goods to a unit in SEZ out of its foreign currency account is also eligible. And here the banks can permit their exporters to extend trade related loans, advances to their overseas importers, and it can be out of their EEFC balances without any ceiling. And banks can also permit their exporters to repay packing credit advances which were availed in rupee or foreign currency, and this repayment can happen out of the balances in their EEFC account or rupee resources to the extent exports have actually taken place.